help with tax, don't know what to do. The Brysons are here for you. We know every tip and trick. The serious tax talk with a Louisiana twist.
Well, hello there. It is great to see you again, and welcome back to another installment of Talkin Tax. I'm your host and moderator, Ryan Ruff, and we've got the stars of the show. That's Mr. Cary Bryson and Miss Angie Bryson of the Bryson Law Firm. They're joining us momentarily for another tax-related discussion today. But first, look, I want to kind of frame up what it is that we're going to be getting into today. And also a few housekeeping items. First and foremost, if you are coming aboard and joining us now here on the Facebook live stream, welcome. We're happy to have you aboard. One of the great parts about the Facebook live stream is the fact that you're here live, and we're here live. So if you want to ask a question or leave a comment, feel free to drop that in the box below. We'll carve out some time throughout the show to get some of those questions answered. We'd love to obviously answer any of your questions pertaining to the topic of conversation today. But if you're on the flip side, maybe you're checking this episode after the fact, whether it be on YouTube or a podcasting platform, all the same, we appreciate you being here. We would love to have you back maybe on the next Facebook live stream so you can get any of your questions answered in real time. Now, that being said, we got a cool topic lined up for you guys today. If you joined us for our last episode, you'd know that we took a deep dive really into step one, if you will, of the Brysons' overall tax resolution process. Well, they call it their discovery. You know, they break it down into a handful of different helpful phases. You know, we're talking about engagement and onboarding, right? Those initial conversations, but then really they start to get into the nitty gritty of your specific tax related circumstance. Look through a transcript analysis, comprehensive financial review, so on and so forth. Today, though, we're moving beyond that discovery process. We're moving beyond the topic that we chatted about in our last episode. We're moving into part two, really, of their overall, tax resolution process. This part two being monitoring and compliance. I don't want to steal any thunder from Cary and Angie, so let's go ahead and bring them aboard, get today's conversation rolling, and get into this idea of monitoring and compliance. Cary and Angie, welcome aboard. How you guys doing this morning?
Great. Good morning.
Doing well. Good morning.
We're doing great.
Hey, it's great to see you guys. Great to have you back here. Let's get into it. Monitoring and compliance. So, hey, we've moved past the discovery process with our hypothetical client. We're now moving in to part two, this idea of monitoring and compliance. Give us a high-level overview, maybe to start. What's your thoughts and this process really unfolding with part two of monitoring compliance? Where do we begin? What's the point of all this?
Go ahead.
Well, you want to do it?
Yeah.
Well, at this point, like you said, we've got the client figured out. We kind of know everything. We probably know more about the client now than the client knows about themselves, at least on their accounting books and their financially. Yeah, financially. Yeah. Sometimes not, though. Sometimes it gets into other things. But anyway, so now we've set our case plan and we're really implementing the case plan. But there is an important step, and that's why we put it here. There's a very important step before we get into resolving the case. And a lot of clients are thinking, okay, let's just go solve the case. Well, you can't, because you got to prepare yourself for resolution. Because if you go too early, if you go prematurely, you're really costing a lot of effort, time, and you're wasting a lot. Because the IRS is, if you're not ready for resolution, if you're not current compliant, and you're not in the proper posture to resolve your case, then after a 4-month delay, because it takes them that long to figure everything out, they're going to just send it back one day and say, oh, you're not current, you're not compliant, and then you're 4 months down the road and you're that much further along. So a very important step is kind of a preparation for resolution step, I call it. Getting everybody ready, and then you'd be surprised. It's little simple things, like just making estimated tax payments to start that process, because we want it's like I tell clients all the time. When you come in, I want your tax problem to be an old problem. We don't want it to be an ongoing problem. I can't fix ongoing problems. I can only solve old problems. So I've got to make your problem old. I can't make it current and new. So I got to make sure from here forward that you're good. You're doing everything right. We're perfect. So then by the time you get to the IRS, because it's going to take them months and months and months to look at it, it's an old problem. Because if not, then naturally the IRS is going to say, well, why would we solve this case? He's just going to default right again. It's going to go right back. And in some cases, they're actually true, So it's a good step, and it's an important step. And, a step that we do spend some time on to make sure clients understand how to be current and compliant.
You know, Cary, we've heard the double C is current and compliant. I feel like on just about every conversation that we have had on this show. And if there's one thing I could bottom line really for our audience is the importance of being current and compliant. So let's get into this monitoring and compliance process here for you guys. That starts with phase one, this idea, the accounting and the tax returns. Angie, you want to maybe shed some light on what phase one looks like for us in this process?
Sure. I mean, you know, in the discovery phase, we will typically do a deep dive into the number of tax returns, if any, that need to be filed. So if you have some time frames or time periods, if you're a business or an individual where the returns were not filed or not, or maybe they were lost by the IRS and so they're not filed, we will start diving into identifying those tax periods for you. So once we get a list of those, essentially, then we need to start from the beginning, right? So we've got to get your accounting correct and accurate so that we can prepare the tax returns accurately for the client and make sure that, it's the exercise here is really to minimize the tax bill within the legal parameters that the IRS gives us, right? So if we've got good accounting, then we can begin and we can have the tax returns prepared either in-house with our sister company, Bryson Accounting, or we'll work with a CPA that the client may have on board or another tax preparer. So that's really the very beginning of this process, to identify the accounting needs, get them working, get some good numbers, and then plug those in with all of the other information we have into the tax returns and work on getting those filed. And once that's done, then you can move on to becoming compliant, essentially.
Mm-hmm. So quick question of clarification for you then, Angie. Do you, at the Bryson Law Firm, do you help physically file those tax returns, or is that something that the client needs to, like you said, work with their CPA on? Talk to me about this.
So we do have a sister company, Bryson Accounting and Tax, we call it BATS, that works hand in hand integrally with Bryson Law Firm to assist our clients. And, there's some historical context for, the creation of our sister company that maybe Cary can help me shed some light on. But a lot of our clients don't have CPAs and they don't have preparers because they've either done them themselves or their CPAs have moved on or whatnot. So we created, Cary and I created Bryson Accounting and Tax as really a companion and to help our clients stay compliant once they get there and to get them to that place. You want to shed some light on that?
Yeah, I mean, a lot of our cases come from CPAs. So of course, if they have a CPA, we're not going to get involved.
Sure.
We'll
assist.
Yeah, I'll assist and help the CPA.
Yeah.
Or even, but a lot of times, what happened, just to give you a brief story about how this company was started. I had several, of course we have several friends who are CPAs. And if you call a CPA and tell them that you have 7 years of tax returns that you want filed, most of them are going to tell you, no, I don't want to do that. I don't want to do that. That's not what they do. Or if they do it, I found, they'll say, okay, yeah, sure, be glad to help. And they'll take it, and they will take forever to get the returns filed. And this
is not a priority.
This compliance step is not a forever step for us. We're trying to get the case resolved, and I can't go forward until I get all those returns filed. So for me to sit here waiting on someone to file the returns does become problematic because, simply, just if the IRS files a levy while there's an unretired and when there's returns that are not filed, it's very, very difficult for us to get relief from that levy. Extremely difficult. If all the returns are filed and we're moving along, much, much easier for us to get relief. So if we're waiting on a CPA and we've been waiting, in the meantime, I'm telling the IRS, I'll have these returns. Right. The CPA told me I'll have them by the end of the month. End of the month comes and goes. Well, the IRS is thinking, oh, they're just playing games. Boom, they'll file a levy. And then I'm like, oh.
Not a lot of leniency there.
That's kind of that's how the company originated, really, was we got caught in that trap.
Well, we wanted to make filing a priority for our clients. Mm-hmm. If they were on board with Bryson Law Firm, we can control the pace of the way, within reason, the way that our returns are prepared. So if Cary Bryson needs a tax return today, all of a sudden it's kind of on fire, we can expedite that. And, he will jump in priority to someone else within our company who might need the return next week. It's really a wonderful companion service to our clients.
No, I would say it sounds like a real perk for the clients, the ability to escalate that process. Within reason. All right. So here we are, we're rolling through the accounting and the tax returns, this idea of achieving compliance, which is phase 2 of this whole, step in the process. Achieving compliance. Talk to me about what this looks like. Once you go through the accounting and file those back taxes or the tax returns, do you get a big golden letter from the IRS that says, hey, you're compliant? How does compliance work, and how do you know when you've achieved that?
So, compliance is really the perfection of what we've done in phase 1, right? So we've prepared the returns, done the accounting, prepared the returns, and we filed them. Compliance is confirming that with the IRS that those returns have been lodged timely, properly by tax period. The balances are what they should be. If there are any balances, the payments have been posted properly to those tax periods, and that everything is ripe and ready, kind of neatly packaged, ready for resolution. And we have a bottom line number that we're trying to handle. So once, you've got 6 years, we add up all those numbers, we make sure they're correct, and we get a number that we can deal with. And oftentimes our resolution is dependent on the amount of that number. There are other issues too that you might want to talk about with regard to SFRs. And it's sort of off topic, but if someone's had a return prepared for them by the IRS, which is really a whole nother kind of side issue, then they may have a balance due that's not accurate. And we'll replace those returns and bring those numbers down, hopefully, for the client. So essentially, it's making sure they were filed, payments were posted, the numbers are proper, and we are ready and ripe with the IRS to make a resolution proposal or plan, a final step towards the next podcast, essentially.
Roger that. And so as I'm I've got my overview really of this monitoring and compliance process in front of me. And I see after you've achieved compliance, before we roll into really step 3, which is the tax resolution plan, which obviously there's a lot for us to unpack in that conversation, which will likely be our next episode. But before we move into resolution, we walk into phase 3 of monitoring compliance, and that's account monitoring. Talk to me about what account monitoring is, why you do it, and why it's important before rolling into resolution itself.
Mainly, I would say account monitoring is what we're doing. Basically, is making sure everything we've done in this step and previously is on the is in the IRS file, because oftentimes, especially if clients like someone that doesn't know better will take 6 tax returns and just put them in one envelope, something that simple, and mail them in. Well, if the IRS gets 6 tax returns, they're going to take the top tax return, and the rest of them are going in the trash. They're going to process the first one. So you got to make sure we know to mail them, one day at a time. You don't mail them all at one time. You kind of spread them out
separately.
And then you got to make sure that they actually get processed by the IRS. I know right now, because of COVID, the IRS is 6 months behind. We have clients getting letters, where's you need to file this tax return. Well, it was filed 6 months ago. Yeah. And they're just waiting on the processing from the IRS. I think they finally issued something today or something and said they're going to stop sending the nasty letters out because they realize they're backlogged. After all this time.
Right.
But anyway, so it's a very important step because, people think, well, I have people tell me all the time, I filed that tax return. And we can look at the account records and see, and if you filed it, it's not processed yet. So you need to give me a copy, and we got to re-sign it. We're going to make sure it gets processed. And that, what Angie hit on too, very importantly, was that SFR process. And people don't realize that, when you don't file a tax return, the IRS it has a very few options. Okay. And people think that, a lot of people think, well, I just won't file. I'll get away with this, or I'll
run under radar,
or I'm not going to get, they won't come after me for a while. And that's really not what happens. when you don't file a tax return, that's criminal. I mean, it actually is a crime to not file a tax return. It's not a crime to owe the government tax liabilities.
No debtor's prison.
Yeah, it's a crime to not file the tax return. And it's 1 year for each unfiled return. So those penalties can add up quick. Now, it's not often done. It is rare, and it's usually used, it's added on to some sentence when they have somebody else, because it's a very hard defense. If from a legal standpoint, either you filed or you didn't. It's a very hard thing. So when they trying to get you for tax fraud and tax this, and they also have a couple of tax returns you didn't file, well, they already got you. It's 1 year for each return. So you're already staring at 2 or 3 years, and then you got, they want you to plead to this. So, it's used as a real strong hammer. The second thing they can do, what Angie alluded to, is they can file the return for you. It's called a substitute for return. And once they do that, that becomes your tax return. And I have never in my life, I mean, it's just 25 years of doing this, ever seen a substitute that was correct. And it's never correct in favor of the taxpayer. It's always going to be elevated in favor of the government.
Go figure.
So, it's extremely elevated usually. So, and the third thing they'll do is they will do, and they'll wait, and they'll give you time, some more time they can wait. But they're going to do one of those three things. And when they do that SFR, like I said, that becomes your tax liability. They can start collecting that. They legally can collect that tax.
That's why they do it.
Even though they know it's wrong, they can collect the tax. It starts the thing. So you have to fix that. And by fixing it, like I said, that becomes your return. So you can no longer file your original return anymore.
You have to file basically an amended return.
You can't.
Essentially.
Well, no, it's not. It's not amended.
But it is.
It's not amended either. It's actually what we call an audit return.
Yes.
So what we do, we're actually triggering an audit for that tax year to get it corrected. Because, I mean, it is a real simple fix, but you actually have to mail it to a certain department and get it to a certain process. And they actually open an audit for that tax year. Then, of course, they just replace your return. So you basically do an original return, and you got to do some markings on it to indicate that it's for an audit, and you send it there. It's a process. And it's not easy. It's not something easy to fix unless you absolutely know what you're doing. And of course, of course, it is going to the audit department. So you want a pretty good return. You don't want a bad return.
Right.
So that goes back to phase one. So, one of the reasons why we have phase one in this part is to make sure the accounting and tax numbers are correct. So it does drill down that beginning of this process, and it's important to have good numbers.
Yes.
Sure.
And our clients get frustrated with us sometimes because we ask them for so much information, right? So it feels like we're just probing every part of their lives and financially. But for us, the due diligence is paramount, because we do want to make the tax bill as low as possible within the legal parameters given to us, right?
Sure.
And then like I said, that's where the monitoring will come in when you're waiting for an SFR to process, or you're waiting for something to get done. You have to watch these accounts because we can tell from our side, we can tell when the IRS is starting to do things. They're starting to move. They're going to start collecting. They'll start this, and then we can be.
Well, that's also part of the monitoring.
We can. So, that's what I said. We're part of the monitoring phase. Yeah. We could be a little, preemptive and hopefully head some stuff off before levies or liens and everything start. Liens you really can't head off. I mean, it's really mostly levies before they start collecting that tax. You can kind of head it off by monitoring the account for a period of time.
Well, yeah, I mean, if there's a situation where you have some years filed with balances due and other years, that's an interesting part. The look back period, we haven't really talked about that, but if there are balances due for some periods, we've got to watch those and babysit those to make sure that no collection activity happens while we're waiting for those other years to process within the IRS system. So part of the monitoring is not just monitoring for the new periods that we're filing returns for. It's also to make sure that the client's not at risk and to hopefully minimize their risk by making voluntary payments or appealing any notices that come in the interim while we're waiting for the whole package to be completed. So there's a lot of moving parts in terms of monitoring. It sounds very simple, but it's not just like what you would envision as pulling a transcript and looking at it. There's some strategy that happens case by case.
Yeah, current and compliant. I mean, that's where people want to be, and in order to get there, you gotta stay on top of your records. But also, when you fall behind a little bit, there are tax professionals like you guys to be able to assist. Because I mean, just running through all of the various outcomes that I know we've talked about, not only in this episode but in past episodes, of what can happen when that tax bill racks up or the issues continue to stack upon themselves, it's daunting. It can feel like the weight of the world is on your shoulders, and boy, does it help to have somebody in your corner. Guys, that being said, when it comes to this idea of monitoring and compliance, I know this is relatively a shorter episode for us, just because this is a shorter process as a whole within your tax resolution process. But any final thoughts, in regards to this monitoring compliance and the importance of really, getting compliant, allowing you guys to monitor the accounts, make sure that everything is ready for resolution. Any final thoughts before we part ways and say goodbye to our audience today?
Say it every time. Start. Do something.
Yes.
Because until we get to the ball rolling, you're going to be afraid, and there's going to be some fear there.
Yep.
Just start.
And I just going off what Angie said last time, since we have a little bit, because it comes up a lot, and I don't know if we've ever really talked about it on any of these episodes. In the IRS world, each year is its own separate account. Mm-hmm. And that commonly is misunderstood. If people think that, the IRS, you can owe, $100,000 for 5 years, but 1 year is just $5,000, but that year is the active collective year. The IRS can just collect on this 1 year, and they're not ready to collect on that. So it's really is the kind of an understanding. People miss this a lot, thinking, well, they owe this, but it's really a lot of times you can get in here and you can do something in this 1 year, create something and stop collection for the 1 year, and you've got everything else held at bay. So it's really kind of that, it's the realization that it is each individual account adds up to the whole. Now, of course, when you resolve it, you got to resolve each individual account year. You can't do 1 year and not leave one off. You have to do every year that has a liability. But for collections, they don't have to collect that way. They can collect how they choose on piecemeal years. Yeah. So I just want to make that point, because a lot of people misunderstand that. It's just something I don't think we've ever spoken about.
A lot of practitioners don't understand it as well. I mean, so the only other thing I would add is typically the compliance period is 6 years. So we are looking back 6 years. So if you've got unfiled returns for a long time, the IRS is typically going to look back for at least 6. But the criminal element is always there. So we've got the civil side, which we're dealing with in terms of resolving and getting things paid, but the criminal element is there. And we'll evaluate the risk to the client and give them, good advice on how far back to look or to become compliant. Those are the big ones.
Yeah, well, there you have it. I mean, a ton of great information packed into today's episode, guys. For anybody in our audience that, this conversation's really resonating, they're thinking about the years that maybe they didn't file, or the idea of current and compliant, just how that might be a weight off their shoulders. Maybe they're interested in reaching out to you and your team to just start the conversation. You guys said it yourselves, just do something. If that looks like just a kickoff call, something to get that process rolling, to reach out to you and your team, what would be the best way that you would want our audience to know how they can get in touch with you guys to get that ball rolling?
I would say
go to
brysonlawfirm.com, and there's phone numbers on there to call, or you could fill out inquiries on the website itself, and just make contact. Either way, send an email, send the contact, make a phone call.
I mean, we have a pretty stellar onboarding team. All of our team is stellar, but I mean, we've got a really good, easy system for onboarding.
Good to know.
Because of that, people are scared, and I get it.
Yeah, absolutely. Well, guys, look, I appreciate you carving some time out of your busy day to be with us on the show this morning to talk about this idea of monitoring and compliance. I know we're going to dive into the different resolution strategies available and what that third part really of the tax resolution process looks like for you guys. But either way, appreciate you and your time, and I'm looking forward to getting back together with you guys soon.
Thanks, Ryan.
Thanks, Ryan. See you later.
All righty, take it easy. And hey, look, we want to say one final goodbye to our audience, you guys, for jumping aboard, being with us on the conversation today. If you liked what you saw, you liked what you heard, maybe you benefited from any bit of the conversation today, do us a favor, hit that like button, subscribe to the show, whichever platform that you checked us out on today, and then, of course, share this information with friends and family, anybody that you think would benefit from these tax-related discussions. We've got some great topics lined up for you in future episodes that we would hate to have you miss out on. A lot of beneficial information regarding the tax world packed into these conversations. So be sure to always check back into the Bryson Law Firm Facebook page for updates on when our next live stream or episode will be dropping. So for Cary and Angie, I'm Ryan Ruff. We're going to go ahead and say so long today, but we appreciate you being with us on today's edition of Talkin Tax.